Hey, good afternoon. It is Monday, first part of May, getting the month kicked off, and I think tonight it is time for a memorandum of understanding. And what I mean by that is I'm going to take the opportunity tonight to try to explain what it is that I'm trying to do with these videos, the purpose and intent behind these videos. And it is not to be right or wrong. I've had some people reach out to me and tell me that I was 180 degrees off and absolutely wrong about last week's end of week's price action. I'm going to explain to you in tonight's video how that's absolutely impossible. Because my intent is to have a plan. And my plan is an if-then-that plan. If higher, well then this is what tells us that trips that wire, and then that is what your target is. That's your plan. If then that. If higher or if lower. And if you remember last week, I was trying to prepare you for if higher and if lower. But in doing so, reading this profile from Thursday, this is a recapture of Thursday's price action showing the point of control for the day up here at 80 and for the week down here at 14. Stated to you that I believe strongly that price action would trade both 80 and 14 against an over-under in the middle at 40, and that would determine the direction for the day. So first question, pop quiz. Does anybody know what time the market opens? No, we're not trading Twitter, so we're not trading eBay, we're not trading Roku, so we're not talking about 8:30 in the morning Chicago time for the U.S. equity open. We're talking about S&P, so we're talking about the S&P's market open. The S&P's open at 5 o'clock in the afternoon Chicago time. That is 1700 hours, and that is to start the day for the next day. So in the next slide, I'm going to try to give you a depiction of what it is that happened after on hard left over here, because we don't know anything that's about to happen on the right yet. That price action is yet to play out. And I'm not trying to be right, by the way. And so if there is no right, then I cannot be wrong. There is no right, there is no wrong. It's about having a plan. I'll furthermore submit to you that if you want to be right, you get one thing for that, and that's a stroke of an ego. You cannot take that to a bank and cash a check on it. The bank's going to tell you to make a deposit before they'll cash your check. Okay? And you're not going to do that with a pat of an ego. So this is not about being right. It's about having a plan. Why have a plan? Well, what if I tell you you're going to swap $150 for a bar of gold? And you say to yourself, man, I got $150 in my pocket. And I say, yeah, but that was a bad trade. Well, what's the analogy? What are you talking about in trading? What if you get 3 points out of a 130-point move? Is that a good trade? You can say, well, I got $150 in my pocket. And I can say, yeah, but it was a bad trade. To take three points out of a 130-point move, it's not a good trade. Well, how do you know that there's maybe a 130-point move? Well, you have a plan. If you don't have a plan, you don't have something to try to hold for and shoot for. Because inevitably what's going to happen is after you get your 3-point target, your next trade you're going to get in, you're going to get 10-point drawdown, and you're going to pray for it to come back to break even. Taking 10-point heat on 3-point targets, that's not sustainable trading. So you're not going to be able to do that. Not in the long run. Going back to the plan, we said 80 over 14, 80 target on the top, 14 target on the bottom, 40 over under. And we don't even know where the market's going to open yet. But so happens that Amazon reports poorly, and it opens down here at 40, as you can see, for Globex Open. Again, what time does the market open? Well, if you're trading Twitter, then it's 8:30 in the morning. When you're trading S&Ps at 1700 hours or 5 o'clock in the afternoon, that's market open. I'm sorry if you think it's 8:30 in the morning, but it's not. This market opens at 5 o'clock in the afternoon, and that starts the trade for the entire next 23 hours, when it then closes at 4 o'clock, reopens at 5. This is a 23-hour market, or a day market. All right, so it opens at 40. Where does it go? 80. Where does it go from there? Back to 40. Where does it open with the cash market in the morning? 40. Trades up to what? 65. Now, would you believe for a minute that somebody's going to tell me that I'm wrong because I told you that the market would break at 1 o'clock and it happens that it broke at 10:30? So what, it breaks at 10:30? It traded 40 by a lower high of 65 and rolled. And it rolled back to what? Over under at 40. And then did what? Broke for what? Right there is 15, 14, 15 right there. did what? Bid back up into the open range low and broke again. To what? 41.65 and lower, which was our bearish target, if in the event it happens to trade lower. So don't reach out to me and tell me that I got something wrong, because you're not going to reach out to tell me that I got it right, because there is no right, there is no wrong. It's about having a plan. If then that, if higher, what tells us higher, and what, and then what would be the target for that? It'd be 43.35. That would be the target for bulls. Above 80 targets 43.35. Or 80 catches it, which it did, spins it back to 40, breaks 40, and targets 14, which it did, proves 14's worthiness by trading an hour and a half on 14 before it breaks again, comes back up to test it before rolling off, and then tests the bearish and beyond of 41.65. So if 80 happens to hold this thing and below 40, then target 14, and if below that, target 41.65. And that's what played out. The general idea and the thesis here is this. I'm not going to come to you. I'm not going to change what I do either, by the way. If you want somebody to tell you exactly what the market's going to do the next day, go somewhere else. Find another video feed to get that answer, because that's not me. What I'm going to do is I'm going to try to prepare you with a plan for if, then, that. I'm not going to change what I do. It's if higher against this to target that. If lower against this to target that. One of those two is likely to play out. There's only one alternative, and that is that it chops around in the middle all day and does nothing. That's really all I got to say. So, and by the way, let's try it. You can reach back. I wish you wouldn't, actually. I don't need the feedback with the you got it right or you got it wrong. I really don't. I'd rather not even hear it. But if you want a prediction for what this market's going to do, this market's going to trade down to 40.70 in the S&Ps. It's going to bounce from there back to 4,200 in about 20, and it's going to break from there, and it's going to trade all the way down to 3,600. And we'll talk again at 3,600 after the Fed gets done with what they're going to do on the 4th with a 75 bip hike, and again in June with another 75, and again in July with another 50. And so there's a prediction for you. I don't like predictions, but there's a prediction if that's what you want. All right.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me